Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 4th of February 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of, but as it's a Monday, of course, we'll look at things from a weekly perspective, and I've highlighted the weekly changes here. One or 2 points I just want to bring to your attention. Let's start with cable, the British pound against the US dollar. Down on the week, the pound sterling down by around 0.67% against the US currency. But look at this longer term monthly trend. The pound still stronger against the dollar by around 2.31% over the course of the last month, despite all the confusion around Brexit. While we're here, we'll just look at the Australian and New Zealand dollars, both a little bit weaker against their US counterpart. We'll look at some of the reasons behind that a bit later in the video. Near neighbours to the USA, Canada and Mexico, both, well, on the monthly trend, both making gains against the US dollar, but Canada has made most of those gains in the last week. Mexico giving back around 0.47%. So something of a mismatch here between those two neighbouring currencies to the US, and indeed between the intra-week and intra-month trends in the Mexican peso. One currency I should say, that seems to be making ground on an almost continual basis is the Brazilian real. Now, the US dollar did take some money back off the Brazilian currency on Friday, about 0.43% in fact, but that was probably book squaring at the end of the week. If we look at both the weekly and monthly trends for the real, we can see there are strong gains over both of these time frames for the Brazilian real, so that's one certainly to watch. From here I would suggest dollar index for its part trading just before we recorded the video at 95.71, really unchanged on the week, unchanged on the month, modestly better on the day, still looking for those directional cues. We keep going on about that, and even after the Fed and those impressive US jobs numbers on Friday, the dollar still can't find its mojo, if I can put it like that. So I'll be watching that closely again throughout the course of this week. Okay then, what's on the calendar? Events that may move the markets today. It's a pretty busy calendar today, although light on any real high impact data. Just to flag from the off that it's the beginning of the Chinese New Year today. The official holiday starts tomorrow, but it's New Year's Eve in China today, a week of celebrations there. We've already had some data out of Australia overnight. We had securities inflation data for the month of January, job advertisements for the month of Jan, and building permits data for the month of December. We'll take a closer look at that in a moment. To come at 8 AM GMT, we'll have unemployment change in Spain for the month of January, a speech at 08:30 by EC board member Merkel, and then at 09:30 GMT we will have UK PMI construction data for the month of January, and that'll be accompanied by the Centex Investor Confidence Survey for the month of February across the whole of the Eurozone. At 10 AM we shall have Consumer Price Index data across a variety of metrics from Italy, and at the same time producer price or factory gate inflation out of the Eurozone for the month of January. Then we pause until 14:45, crossing over the Atlantic for the ISM New York Business Conditions Index survey for the month of Jan. And then 15 minutes later, we shall have factory orders for the month of November. A lagging indicator there, but nonetheless one that can shed some light on the state of US industries backlog and order flow. 16:30, we shall have 6-month and 3-month bill auctions out of the States. And then at 1900, a look at US lending through the Loan Officer Survey for the fourth quarter. And finally, at 21:30, we shall have the AIG Performance of Services Index data for January out of Australia. Okay then, breaking news and comment that's caught my eye overnight. First of all, China's Caixin Jan Services PMI Index came in ahead of forecast at 53.6 versus expectations of 53.3 and a reading of 53.9 last time out. So better than expectations, lower than the prior read, but still showing a considerable amount of growth at 53.6. So that's good news for the services sector in China. Meanwhile, a Royal Commission has recommended a complete overhaul of bank regulation in Australia after what was described as years of excess. Staying in Australia, Australian building permits have fallen sharply and unexpectedly during December. They were down by around 8.4% month over month versus forecasts for gains of 1.8%. So another disappointing figure there, I think, for the RBA, and perhaps swinging the balance against an interest rate rise and towards an interest rate cut, maybe favouring the latter rather than the former. Angela Merkel will begin a visit to Japan today, and she will discuss trade, China, the USA and other issues with Japanese PM Shinzo Abe during her trip. Okay then, food for thought and something to take away with you into the trading day and beyond. Well, why not think about this? Demand for gold rose last year, driven by central bank buying. That buying, the largest in 50 years from the central banks, more than offset the outflows from ETFs and other gold-related investments during 2018. Central banks added a total of 651.5 metric tons to their reserves in 2018, and this data drawn from a recent World Gold Council report which looks at the trends within gold demand during 2018. As you can see, a 4% growth in annual demand was the net conclusion there. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, who will be happy to take you through those. And do as I say, take the time to read this risk warning thoroughly. Thank you very much for your time today.